Good afternoon. This is Monday afternoon, April 18th, Simpler Futures free market update. And listen, let me try to map this S&P out for you for this week. See what we come up with. All right, let me give you the numbers, tell you what I think is important, over, under, targets above and below, etc. Start with 43.87 in the S&P futures with the June contract. That's last week's settlement. That's essentially the week open. I mean, within 2 points, that's the weekly open. It's within 2 points also of last Thursday's, because there was no trade on Friday, so last Thursday's low. That split the difference too, by the way. 85 low, 89 week open, 87 settlement, 87's right in the middle, so 87. Next number is 75. That is plus or minus. That's the expected move this week. 75. 43.87 plus 75 is about 44.60, 2, 3, 4, something like that. So 44.60 is a couple of things, actually. That's a big one. You want to remember this one for some time to come, not just this week, but remember it for a good while. Why? Well, that's the point of control from all of this block of trade from 41.50 low by 46 some odd 20 something high up here. All of that trade up and all the trade back down. That's the point of control. It's also one of these old quarterly settlement prints right there within a couple of points, which is also last week's high. So that's a big one. That would be your bullish target this week also. That's 43.87 plus 75, which happens to be last week's high, which is the expected move, which is the point of control for that whole block of trade. That's a big one. 43.87 less 75 puts you down here at 43.11. That's interesting because that's a number that we discussed this morning in the trade room as bearish target, but it's got some work to do to get there. So let's tighten up a little bit on this and know that that would be your bearish target, okay? 44.60 on the top, 43.11 on the bottom. That's your bearish target, bullish target, etc. But how do you get there? What's the deal? How are you going to get there? Well, last week there was I was not in the office or in front of the computer last week, by the way. I was actually away from charts and everything. But I prepared the trade room with an observation of what I thought was important in this area while price was going to be trading in this area, and that was 44.14. That's actually what I'm going to call the over-under for in other words, like 43.87 is the starting point. I mean, that's where the whole week started. That's where last week ended. That's the starting point. But to start to look bullish, in order to start to look up towards that 44.60, you got to have something, a mechanism that's going to trigger your thinking, long. That number is 14, so 44.14. That's another one that we want, all right? Now, on the way up, what's it going to try to work through? Well, last week's point of control was 44.28, 27.28, call it 28. So 28 would be your first T1, I guess, on the way up, right? And then just above that, you've got these wicks right in there, which is also a fib level on the daily chart right here, which we're going to call 40. We're going to call that one about 45, 42. We'll call it 42. All right, so 14 is the trigger that tells you, all right, we're going to start looking long. You're going to look into 28 and 42. That's your T1 and T2 with ultimate bullish objective up here at 60, call it 3, 62, 63, whatever. That's the big target on the top. Now, I'm not saying I think it's going that way. In fact, I really don't. That's not my really preferred view. Actually, my preferred view is that it trades up around that 14 and gets stuffed and rolls, and it starts to tag some bearish objectives on the way down. Now, these bearish objectives are what we're going to do next. So you got your over-under there at 14. If it tags that, and this is what I actually suspect, it tags that and it rolls, gets stuffed, and starts to roll, then what's it going to be looking for on the way down? I got 3 targets for you. The main, really big one that I think that this is my main reason for suspecting that it would be bearish for a small, at least a little bit more continuation down here to the downside, would be 43.30, either 4 or 5. So we'll call it 5, 43.35. All right. That is a big, like, I don't have the volume chart prepared right now to show you, but if you have the volume profile on Thinkorswim and you dial it back into well, hell, you can go all the way back into like even January. You could start from year to date going forward. You're going to see that is a very prominent high volume, which makes it sort of a magnetic kind of a draw. It's a sort of a magnet, I guess, if you will, where there was a lot of trade that went off there. All right, so T1 would be that 35. Then just below that, you notice from the bottom of the move to the top, and now in this retracement, okay, the next level right there would be this 618 level, 618 retrace, and that's at 21. That's the reason for that one. That's really about the only reason, but that's the reason for that one. And then 11. So you got 30, you take your pick, 4 or 5, 35, I guess, whatever. 21 and 11. Those would be your bearish targets. All right, so that's what I kind of see playing out. At least the 35, if not the 35 and the 21. But we'll see what it does. I mean, you got your over-under to trigger it long, if it can trigger through that 14. If it does, fine. But if it reaches up and tags and starts to roll, then you got your targets on the way down. 35, 21, and 11. Ideally, with the earnings that are happening this week, there's a lot of them. Tesla, well, Netflix tomorrow, Tesla on Wednesday, etc. I'd like for the move lower here to be in by midweek. Like Wednesday, the low is in. And then if it's 21 or 11, whichever one it is, but the low is in, and we start to then move higher. But these, I really think that I can make a case for these levels down here to be tested, especially the 34 and the 21. The 11 is the expected move, but the 34 is a big volume level. The 21 is a fib, and the 11 is the expected move. So this, whatever it's going to take to get it down there, I'd like to see that done by like Wednesday, and that be it, and then we start to bounce off of that and start to trade higher from there. But that's it. I mean, we got the starting point. We've got the measured, expected move. We've got the trigger mechanism that says, hey, look for these bullish targets. You got the bullish targets. You got the point to look for the over-under, i.e. failure to get stuffed and roll. If it does that, you got the bearish targets. And I hope this helps. I'll leave you with that, and look forward to being with you again at the next update. Good night.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me